Hello guys, this is Louise, the alien trader. Yeah, the alien trader. I have something nice for you guys. A video about the Fibonacci. A video about the Fibonacci. The title of this video is the Fibonacci Edge, unlocking Fibonacci secrets to trade with precision like a pro. Yeah, many of you guys who want to be trading with precision like a pro, right? Using the Fibonacci. This video is meant for you guys. You understand? So watch carefully, listen to every steps I'll take in this video. You get, you will learn a lot. You will learn a lot. I know you've watched many videos about the Fibonacci tool, how to use it, and the different levels of like different almost every trader have their own Fibonacci settings, their levels and what works for them, right? But I promise you that this is the best Fibonacci video you will ever encounter in your trading journey. You get, just stay along with me, pay attention, you will learn a lot from this Fibonacci. You get, okay. Now, what is the Fibonacci tool? Let's start from there. What is the Fibonacci tool? Like, say the Fibonacci tool is a tool that helps you. It helps a lot in the financial market. Yeah, it helps a lot in predicting move if you know how to use it. It helps a lot in predicting support and resistance level, the discounts and premium pricing and equilibrium pricing. Get, and like you all know, the Fibonacci was the Fibonacci. So it's actually someone's name, right? Is an this guy this guy said he's an Italian mathematician named Leonardo Fibonacci. I think Leonardo Fibonacci. He was the person that invented the Fibonacci tool and named the tool after his name, right? So now, but this is trading, right? We want to talk about the Fibonacci, how you can use it to your advantage in the financial market. So, pay more attention to um how I discuss about the Fibonacci with you guys, right? So at the end of this video, you grab more knowledge about the Fibonacci. You get, now, how does the Fibonacci helps you in the financial market? It helps you identify support and resistance zone. Yet support and resistance zone, just like the Fibonacci. Let's say we have two types of Fibonacci. You have the Fibonacci retracement and the Fibonacci extension. You get, these are the two types of Fibonacci. You get, and I will tell you the Fibonacci. How will I even put this name? But the Fibonacci that helps you know your premium and discount pricing, even your equilibrium pricing. You get me, right? So pay more attention. How does the Fibonacci helps you in the financial market anyway? The Fibonacci helps you to identify support and resistance zone. Yet that's the Fibonacci retracement. When price is buying, right? When price is buying, I need to retrace to continue the buys, right? You have to identify the resistance zone where price will tap and continue for the buys, right? And when price is selling and want to retrace and continue selling, you have to identify the support zone where price will tap and keep selling, right? So that's the Fibonacci. That's one advantage. That's one uses of the Fibonacci. It helps you identify support and resistance zone, and also we have the Fibonacci helps us to predict price movement. It helps us to predict future price movements. How do you, like, if you have a chart without any past price action, you get, how do you predict the future price movements, the future support and resistance zone? The Fibonacci helps you to do that if you know how to use it. So I will teach you how to use the Fibonacci like a pro. That and is the Fibonacci extension that helps you to do that, right? The Fibonacci extension helps you to predict future price movements. You get, and the Fibonacci, it helps you to analyze market trends. Yeah, analyze market trends to know your premium and discount pricing. I think these are the major uses of the Fibonacci. Now let's dive into this Fibonacci we are talking about, right? Let's dive into this Fibonacci we are talking about. Normally, you know about price action, right? When price, candlestick is a range, right? Price always creates a range. When price is going, right? If price should be, let me say, if the order flow is bullish, if the order flow is bullish, normally price will create a range, something like this. Let's in a case of bullish order flow, price from here, you're watching what I'm doing, right? Pay more attention, pay close attention. In a case of bullish order flow, price will spike from here to the upside, right? Normally price will normally give a retracement. Let's say this looking at this is a higher time frame. Let's say H4 time frame, 4 hour time frame, right? And now you see price pulling back. Oh god, this is not a two. Okay, this is two. You see price created a range. This is a range low, this is a range high, right? And price want to retrace and continue. If the price is retracing and you have the knowledge, you have a good knowledge about the financial market, how to trace retracement it gets in lower time frame, right? It's not that it's not that the trend has changed. Oh. The trend is still bullish in higher time frame. Price just created a range. This is a range low and this is a range high. But price needs to retrace to the discount pricing, right? Price needs to retrace to the discount price in order to continue. Either tap a discount order block, right? It will tap sorry, yeah, a discount order block, which is a demand zone. We call it demand zone, right? So something like your M15, you see price retracing to the downside, right? Keep creating lower lows, right? Lower lows and lower high, retracing to tap the discount zone of the range you are trading in H4 time or in higher time frame. When price taps the discount zone, normally 83.3%, I'm still coming to the fib level, right? So when price tap the discount zone, it will go up like this, boom, boom, you get. If you don't have knowledge of trading retracement, right, you might think price will keep selling because price came down to the discount, so you'll be like, this guy might take out the loss. But you don't know, like you don't know the overall, that the main trend. You should know the main trend when trading retracement. You don't just trade retracement blindly, you get, because lower time frame don't even give you the trend of the market. You want to know the trend of the market, higher time frame does that, H4 does that, right? Why 1 hour time frame, mini trend, right? 15 minutes time frame, also mini trend. You use 15 minutes for your normal day trading, right? So now let's coming back to the Fibonacci. Now, what does the Fibonacci, what how do we use the Fibonacci to our advantage when trading the financial markets? This is what we want to discuss, right? How to use the Fibonacci to our advantage in trading the financial markets. Now, first of all, the Fibonacci helps you to detect your premium and discount pricing. Your premium and discount pricing. Let's say we have a bullish order flow like this from here to here, right? From here to here, something like this. Yeah, from here to here, price stops and go up, right? Now let's know what's the premium and discount pricing of this order flow. First of all, mark out the range, right? Mark out the range. This is a range high. You mark out the range high of this order flow. You mark out the range high, range high. Change this color to black. Mark out the range high. Let's mark out the range low, right? You first of all know your range. You are trading in higher time frame. You should know your range. Whenever you want to analyze the market, you first of all decipher the order flow, the current order flow of the market, whether it's bullish order flow or bearish order flow. Then know the range, the current range you are trading into, right? Once you know the range, mark it out, scale down to something like lower time frame M15. Then Fibonacci helps you to know the premium, the discount and equilibrium zone. Sorry, the premium, the equilibrium and the discount zone. This is a Fibonacci. This is a Fibonacci. First of all, let me explain about this Fibonacci before I'll dive into how to use it to know all this stuff, blah blah blah. Okay, this is my Fibonacci settings. This is my Fibonacci settings. This is my Fibonacci level, right? This is my Fibonacci level. Normally, every trader have their own Fibonacci levels and settings, right? But this is my own Fibonacci level. I call this the 80 fib level. The 80. 80 stand for alien trader. You get the 80 fib level. I'm the one that worked. I'm the one that got this code, right? These fib levels. I worked, like, I know how I got this fib level. I've back tested price and got this. It's from gold. Personally, from gold, I got this fib levels from, you get. But this fib level, it works for all the pairs, but mostly it works for gold and BTC. Gold and BTC, because these are my two major pairs, gold and BTC. And this fib level have helped me a lot when trading these two major, these my two major pairs, right? Now this is the fib level, right? You can see it start from 0%, the 0%, 16.667.7%, 33 point blah 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 percent, and this is a 50%, and this is 66 point something percent, 88 points. I hope you guys can see my screen, so no need of stressing myself to call the values. So this is the top and this is the high of the fib level, and this is the low of the fib level, depending on the current order flow. If don't worry, I'll come to that. Say okay. Now as you can see, this is equilibrium. 50%. Now 50% tells you that this should be the equilibrium zone of the fib level, right? That's it. Now If you see my fib level, you notice that is it has the rows are 6 rows. What, let's count it together. One, two, this one, this two, this three, four, five, six. 6 rows, right? 6 rows. And now we want to use this fib level to decipher the premium, equilibrium, and discount pricing, right? Of a range. The premium, equilibrium, and discount pricing of the range. Now, looking at this fib level, let's divide it into 3 places. 3 places means say from here to here 2, this zone is 1, this zone is what, 2, and this zone is 3. We've divided this 6 horizontal fib level into 6 places. That's telling you that from here, these two box, these two rows is what the premium pricing of a range. These 2 rows is the premium. You are seeing my screen, right? These 2 rows is the premium pricing of the range. Why these 2 rows? This, you should know, this 50%. The up one, the one above the 50% directly, and the one below the 50% is the equilibrium zone. These 2 rows is the equilibrium zone. Why these 2 zone is the discount zone, right? Discount zone. I know when trading the financial market, you would love to buy at the premium zone. You get, you might likely hit loss. You would love to buy at the premium zone, and you won't love to sell at the discount zone. When you want to buy, you buy from the discount zone. That's you buy low and sell high. And when you want to sell, you sell from the premium zone. That's you buy is that's you sell high to the downside of the market, right? So that's it. Now you've know the segment of this fib level, how how it's been divided into 3 places: the premium, the equilibrium, and discount pricing, right? So this is my fib level. You can copy this. After I'll screenshot the settings and paste it. But you can see the level, right? So you mark it out. Then I'll get the settings for you guys and paste it under this video, right? So now you've seen that we've talked about that. This is the what? This is the premium pricing, equilibrium pricing, and discount pricing, right? Now let's know how to use this cheap level in a range. Let's say we have a bullish order flow. It created a range. This is the range low and this is the range high, right? And price retrace something like this, retrace, stop, and spike up because price came to the discount price and has to go up because this is a bullish order flow from higher time frame. Now, what you have to do is you have to know your range high, your range high and your range low. Romeo students will call it CRTI, right? They'll call it CRTI. So you have to know your range high. This is your range high, and this is your range low. This should be your range low. Your range low. Oh God, fuck this guy. This should be your range low, right? So now this is a higher time frame. Higher time frame created a range from here to here, and this retracement, you know that this retracement is a lower time frame retracement. For you to be able to trade this retracement, this internal structure, for you to be able to trade it well, you have to scale down to lower time frame, knowing the order flow from the higher time frame view. You have to scale down to lower time and be careful because this retracement is counter trading. In higher time frame view is counter trading, but in lower time frame view is not actually a counter trading. Is the current minor trend. Is the current minor trend. So but still, when trading it, also be careful because price can do anything. You get. Now back to what we are talking about. This is a range high and this is a range low, and price created a range in higher time frame. Then you use your fib level. This is your fib level, right? Let's know the premium and equilibrium and discount pricing of this range. Now you mark your fib level from sorry. This is a bullish order flow. So when you're marking your fib level from bullish order flow, you start from low here, then go up because what? Price is going up, right? This is a bullish order flow. So you start from low, drag it to the upside to the range high, right? You drag it to the range high. What can you see? From here to here, as I told you guys, is what the premium pricing, and from here to here is the equilibrium pricing, and from here to here is what the discount pricing. What do you see now? Exactly as you tap this guy created a range low to the range high. Go. Discounted at this level, 83.3%. Discounted at this level and what? Spike up. You get? Discounted at this level and spike up. You get? So now you've seen how we use this fib level to decipher the premium, equilibrium, and discount pricing of the range, right? This is a range low, range high. This is internal structure trend. we use this fib level to decipher the premium, equilibrium, and discount pricing. Yeah, right? So now let's refine this our fib level so that we won't have to be seeing all this lot of values, because we are our intention is when when the order flow is bullish, we have to buy from the discount pricing. So let's refine this guy, this fib level. I remove some of these guys. So now if I click the fib level, I'll click settings of the fib level, and which value I don't want to see. I just want to be seeing the values of the discount zone, right? This discount zone, right? Just you remove click this one, remove it. You remove someone one here, and also remove, yeah, remove this one, right? And no need of 50%. But if you want to leave the 50%, you can just leave it, but no need. You just remove it. Just we are just interested in the discount, what, in the discount zone, right? Discount pricing of the fib level, because you want to buy at the discount zone, right? And when you're selling, you sell at the premium zone, right? But also I've already arranged the fib level of it. This is, if you leave this guy like this, it is called what, the fib retracement. This is the fib retracement. Why? Because you mark this fib from your range low to your range high, price retrace, tap at the discount zone and spike up. Tell you that this fib is called what? The fib retracement. Remember, we have two types of fib level. We have the fib retracement and the fib extension, right? So I'm still coming back to the fib extension. This is the fib retracement. Now let me go. I've already arranged that fib retracement. Let me go to my savings. This is it. You can see it, my fib retracement. If I just click it, boom, it show me. Yeah, exactly. Now you see how I mark out this zone with red. I call this the golden zone or the golden level, right? Because most times when you're dealing in a range, you know your range high and range low, and you mark out your fib level. Price 90% of all the time we tap exactly, or at this, or will I say 90? Okay, let me not exaggerate. Let me say 80%, 70 to 80% of all the time, we tap at this 83.3% of the range and spike up. E get. But most times, sometimes, not most times, sometimes price will still tap within this range, within oh god, price will tap within this range, within this 66 and 80. Also, just know that it's the discount pricing they get. Price will tap once price come and enter this range, already just position yourself and be looking for buy entry, right? Once price come and position at this discount pricing of the range, just position yourself for buy, you get. But most times you want to get the best sniper, you wait for price. If this guy if you know that this guy will come and tap at this level, if this guy tap at this level, boom, knack am better lot. But sometimes it will miss this level, but from here to reverse again. If you reverse from here, no issue. It still came down to what, the discount zone and buy. You get, right? So you've seen this fib level, you've seen the fib retracement. This is the fib retracement. Let's draw it again. When you have a bullish order flow, you want to draw the fib retracement. You like see how you draw the fib retracement from your range low, because it's bullish. From your range low, you drag it up. From your range low, you drag it up to your range high. You see it, right? You've seen how I draw the fib level, right? So this is the discount price, and price came down, boom, discounted and buy off, right? So now let's consider a bearish order flow and know how to use the fib retracement in what, in bearish order flow. So now let's clear these guys. Let's clear these guys. So clear this guy now. Let's come to the a bearish order flow. Let's say a price created a range. This is a range high. Price created a range. From the range high of the, come off here. Price created a range from range high. Price came down, right? Sorry, price came down like this, and price has to what? Go to the premium zone. Price has to go to the premium zone. Then tap before selling off, right? Before selling off. Now when you are viewing your high time frame, after making your analysis and you know your bias, you know the current trend of the market, you see the price have created a range high, created a range low, you should be you should just position yourself and know that why this guy will come to the premium zone in order to sell off, right? Because the order flow is what, is bearish. Now what you have to do, just mark out your range high, that range high, the price created in higher time frame, mark it out. Mark out your range high. You mark out your range high, then you go mark out your range low. All these things, just mark it out in high time frame, something like H4. Then if after marking it out, you scale down to lower time frame, 15 minutes time frame, for you to see the clearer view of the market. Right, you might see other internal structure, other internal POIs, just like other block, AVG, blah blah blah. Boom, you might see all of them for me here. Yeah, a POI, you will see, definitely see a POI that will give you an entry model. You get, you definitely, this Fibonacci is just helps you to streamline, or to bring the price, like to bring the view of what you're seeing together, like to help you streamline the picture of the current price action together, so you won't be confused looking at a whole lot of candlesticks. You'll be like, wow, where will I even place my order, where will I even place my sell order, which POI will I choose? No, no, no. Sometimes you'll be confused, but this fib level will help you to streamline all those information and bring it together, right? So you are grabbing the gist, right? So now this is a bearish order flow. See how we draw the fib level in a bearish order flow. You go to the range high, click the fib level, then drag it down to the range low, drag it down to the range low. You get, you see now, you see this guy, boom, at this discount pricing, boom, sorry, at this premium pricing, this guy retrace to this premium pricing and sell off, right? Sell off. Remember what I told you, sometimes if you tap here, and if this guy tap here, boom, I'll enter sniper. Just enter, boom. But sometimes you know it tap here, although even though it reverse from here, still no issue. It still obey selling from the premium um zone. It still obey, right? But me, if you watch most of my trades, you see that I love entering sniper. Sniper or nothing. Because if you enter, it is sweet guy. So another thing about this fib level is, right, when you're trading with this fib level helps you to know when when price will neglect a range. What did I mean by that? When price will disrespect a range. Well, remember what I told you. When you mark out this your range from higher time frame, something like H4, you mark out your range high and your range low. Scale down to 15 minutes time frame. You will see 15 minutes candlestick printing up just to tap at the premium pricing before selling off. 15 minutes candlestick, like 90% of all the time, like I've tested, I've back tested all this information before bringing it to you guys. As I've back tested, 15 minutes candlesticks is not supposed to close above this 83.3%. It's not supposed to close. 15 minutes candlestick have to drop weak, although it will weak this line, this 83.3% line. It will weak it and then boom, start rejecting it and coming down. It's not supposed to close. Okay, reason it with your psychology. Look at this. Imagine 15 minutes candlestick closing at here, closing at this zone. What does that tell you? That it's definitely going for this side, right? Imagine 15 minutes candlestick closing bullish at this zone without leaving a week. You just close it. What does that tell you? Your psychology self will tell you, oh more, this guy is going for this zone, and this guy should go for this zone. The trend is changed, right? Normally, when you're trading your range, the other blocks, those other blocks and your heavy G, they are actually positioned at this 83.3% zone. This is where they are positioned. And if they are positioned here, what you left here is the wick, because remember, you mark out the wicks. The wicks you mark out, right? Not the body of the candlestick. We're marking out your range. So now that's it. If you mark out the wick could be read from here to here. Why here will be your POI, either other block, FBG, breaker, blah blah blah. No, breaker that used to be here. I think somewhere breaker used to be. But you are grabbing the gist, right? The same thing in bearish order flow. In bullish order flow, like we said. The same thing in bullish order flow. When you have something like this, price how bullish order flow. Price from here created this guy. Price from here, from range low, went up, boom, discounted, then buy off, right? Buy off. Then use your this thing, your this thing, your fib, from where here, drag it up. You see this guy came here, most times it will tap either here or leave here. But imagine if this guy tap here. Remember what I told you guy, that candlestick, that 15 minutes candlestick that will tap at this 83.3% is expected to leave weak, to weak it, and not a full body candlestick to close inside here. If a full body candlestick close inside here, almost start fearing, know that most of the times price will come back and take out this range low. If or range high if a full body candlestick in 15 minutes time frame should close below this 83.3%. It's not expected to close there, it's expected to leave a week. Because why? Because most of the POIs of that range you are trading into are positioned at this 83.3%. And what do you what when price approach a POI, you expect price to weak a POI and reverse. You don't expect price to close bullish or close with momentum inside your POI. Imagine you have something like you have something like a POI like this. You have a POI order block like this, and candlestick boom boom, and this guy and one guy like that wey just dey comot from Abakaliki dey move like this, dey move like person wey no see road, come close inside your POI like this, close with bullish momentum candlestick, close here. You sef go start to dey fear, you go know say this guy go. Normally price has to come to your POI, drop weak, reject it, because that your POI is what, is a resistance zone. Price has to reject it and pull down. The price should close inside your POI, bro, start fearing. But most times, sometimes it will be miracle, price will close inside your POI and reverse. I've seen cases of that, but I used to call that one miracle. You get. But when I'm trading, I don't expect price to close inside my POI. I expect price to weak my POI and reverse. You get. That one will give me more confidence that this trade is gonna play out, right? This trade is gonna play out. Now you've seen how to use the fib level to know your premium, your premium pricing, equilibrium pricing, and discount pricing, right? And you've seen how to use the fib level as a retracement fib level, right? You've seen how to use your retracement fib level when dealing in a range, right? Now this is it. Let's talk about fib what extension. You know, I told you guys fib level, you have, I think, three uses. You use it to know your premium, equilibrium, and discount pricing. You use it for retracement level, just like what we did, and use it for extension. What does extension tell you? Knowing future price action, like future resistance and support zone, right? Fib extension, it helps you predict that, right? So you'll be like, how will I even know future price action, like future resistance and supply zone where price will come and tap? You will, fib level will help you to detect all these things. Why? Because fib level, when you mark it out in your range, it's always, most of the time, it's always in line with those your POIs that you'll be expecting, you'll be eyeing to take trade from. Fib level, when you mark it out correctly in your chart, is always in line with your POIs. After teaching all this thing, we will dive into the chart to see chart example. You see that this is not just about blah blah blah. Let's show workings inside the chart. Okay, let's come to the fib what extension. This is a fib extension. Let's say we have a price action like this, this is a range. Price created a range, price created a range, price created. You expect price, when price tap at the discount pricing, you expect price to spike up, and you want to know the range where price will spike up and boom. Although when you're looking for the range, you'll be looking at, your eye will be at POIs around this level, right? Your eyes will be at POIs around this level. Fib level also help you. And what did I tell you? That fib level, when you mark it out in your range, is always in line with POIs at that level you are targeting to take trades from, right? Again, let's come. Then you see price will come to somewhere here, and then maybe go like this, move like this, and continue spiking up. Then let's bring in the fib word, the fib extension. The fib extension. This guy come here. The fib extension. Fib extension. Let me change it. This is my fib extension. I'll drop the values of and the settings of this fib level, the fib level, the fib retracement, and fib extension. This is a fib extension. Let me draw the setting. See how to draw the fib extension. Pay close attention. When I want to draw a fib extension, what does that tell you? Extension, it wants to tell you the extent of where price will go when price break out of a range. It wants to tell you the extent level where price will reach and tends to start reversing or pull down to continue a trend, right? That's why you call it extension. It helps you to dictate those extended level, right? So now when drawing the fib extension, this is considered as the origin. Why this is the origin of this price movement? Is not so. This is the origin of this price movement. And origin, according to your mathematics, you do algebra, you know that origin is always donated by what? Zero. You get? Origin is always donated by zero. So when drawing the fib extension, you start from the origin. You start here on the top, then boom, drag it down to the origin. Wow, you see, what did I tell you? This, see the origin, right? This is the origin, zero origin. You've seen it, right? When drawing the fib extension, tap it here, drag it to the down to the origin. You see, guy, this guy will most time, the limit this guy can go is this 50% level. You won't even expect the normal limit he can go. If this 50% level, this zone, it will reach here and then pull back and go up again. It will reach here, it will reach here, it will reach here, pull back, retrace. Can retrace to this level. Why? Retracing to this level, this 100% level, tap into this what breaker. This is a breaker. You see, this is a breaker, your POI in line with this 100% level. To tap your breaker, boom. As you tap it, then you go up, tap here again. You see, this fib level, just this fib level, just the range. What's the psychology behind here? This is the range that this candlestick created. The psychology behind here is that this range that this candlestick created is expected for this candlestick to print that range above. And the half of this range, the midpoint of this range is the mid is this 150% you are seeing. Means say if price should break this range, price is expected to extend to the midpoint of this whole range, to create an extension that is equal to the midpoint of this whole range, not the whole range itself. When it creates an extension equal to the midpoint of this whole range, it will then retrace, tap into the breaker and then extend to the whole range, making it from here, this movement here, to here. You get? Once price tap here, then it will come again, tap at this breaker. This is the breaker to tap it and then continue spiking up. You've seen the gist, you've seen the order flow, clear and easy. How this speed retracement helps you get, very very easy. So now you should know how to, you've seen how to drop the fib retracement in what, in bullish order flow. So let's check how to drop the, sorry, this, you've seen how to draw this fib extension in what, in bullish order flow. So let's check how to draw the fib extension in what, in bearish order flow. Then we move on into the chart, no wasting of time, right? So now, or let's take cancel these guys, let's clean these guys, right? Let's clean these guys. Now let's go to the bearish order flow, how to use the fib extension in the bearish order flow. Let's say we have something like we have this range high, created a range low, price retrace to the premium pricing, and then extend, boom, and then come back to this breaker here, boom, tap it before coming back to create a few range, right? Before going down to create a few range, then you take your fib extension, bam. You know this fib level is already positioned in fib extension. Take your fib extension. What did I tell you guys? This is the origin. You have to know the origin. In this bearish order flow, this is the origin. This is the origin. This is the origin that sponsored this move to the downside, right? So the origin is being donated by zero. Your 0% level should be in line with the origin of the fib level. So you see how you draw it from here, from the range low to drag it to the range high, which is the origin. Then you take it here, right? You see now, see price, after price break this zone, it will, price will retrace at here. Within, you won't expect price to pass, or let's say news came, price will spike. But even though price spike, it will leave a week at this range. It don't even close. Price will normally close at the half of the range, this range. That's the psychology. You are just imprinting this range above here, tell you in order to know the extent price can move. You get? So price will come here, boom, go up, mitigating this breaker at this level, mitigate the breaker, then come and complete the range. The range from this 100% to this 100% is the same range as from this 0% to this 100%. You get? It's same range. So you've seen how to use the fib extension for a bearish and bullish order flow. Let's hop into the chart, no wasting of time. I know you guys are learning a lot from this thing, right? Are learning a lot. Yeah, sorry, you're learning a lot from this thing. Okay, now this is a gold. This king gold, my best pair, right? My best pair. I've catch many trades using this fib. I've like two sweet swing trades that clear the all-time high. I caught it using this fib level, and I posted the trade, each of my trades, in my inner circle group. In my inner circle, I posted the trades, and they all enjoyed it together with me. So now, when gold was at this range, when gold was at, let me check something. Let me check something. Let me put this thing. We are talking about fib retracement now. Talking about fib retracement. We're talking about fib retracement. Talking about fib retracement, fib retracement, fib retracement, fib retracement, fib retracement, fib retracement. Okay. Okay, let's hop into the chart. This is a bullish order flow in gold, right? This is a bullish order flow in gold. Now let's know our range. Let's know our range. Let's start from this order flow that spiked to this upside. Let me mark out something first and check it out in higher time frame. Mark out this guy. Check it out in H4. H4, 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 H4. Boom, boom, boom. H4. Are you not showing me what I want? Let me check it out in daily time frame. Bam, 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 bam. I'm seeing cool something. Cool thing. Cool thing, cool thing. Nice. Looking nice. Looking nice. Looking nice. Looking nice. Where are we? Where are we again? Okay. Is this 15 minutes? Let's go to 1 hour, 1 hour, 1 hour, 1 hour time frame. Because this price action is too big for me to scale down to 15 minutes. Okay, now you see price. What's the origin of this side, right? Believe me, this is the origin of this side. This low. This low is the low that sponsored the move to this side, right? Many will say that is this low. This low just created a QMR. You get. Let's read the price action together, the order flow. This the high, boom boom, created the low. Let's just focus on obvious lows and obvious swing lows and obvious swings high. This high created this low, move up, created this high, and this high created this low, and this low is an inducement to this QMR, but it's also a low and a liquidity. You can call it that. So this low created this range high, right? So now we have a range dealing in a range. We are dealing in a range, right? So let's mark out the range we are dealing in. We mark out the range. This is a range low. This is a range low we are dealing. Now, this is a range low. Mark out the range. I will mark out the range high. This is a range high. This is a range high. This is a range high. Oh, mark out now. No, the misbehave. This is a range high. Now, oh, this guy. Now, what fib level do you think we can use when we see this kind of bullish order flow? What fib level? What fib type? Sorry. We are not definitely gonna use the fib extension here. What are we trying to extend? We are definitely gonna use the fib what? Retracement. Because this is a bullish order flow. So we want to know the level that price will retrace and discount in order to what? Continue the buys, right? So this is a range low and this is a range high. What I tell you, you pick your fib retracement, right? This is a bullish order flow. From the low, boom, you mark it out, boom, to the high, to the high, to the high. This is the high. And what did I tell you? The price most time will trace at what? The 80, the discount zone. What did I tell you? This is a discount zone. This two zone is a discount zone. I've arranged it. This is a fib retracement. This two zone is a discount zone. Price will trace at the discount zone and most time it will tap at the 83.3%, leaving what? A week. It's not even expected to close there, right? It's not expected to close there. You see price what? Price came, boom, leaving a week. Imagine say you know about this fib level and you've detected your do you know, another thing here is for you to be able to detect your correct range, your dealing range. It's not everything you mark as, not everything you just see, you just mark it out as range. You have to know, you have to know your proper deal, like the right dealing range. If you mark out the wrong dealing range and use your fib level, you will totally see different thing altogether. Imagine someone marking out this dealing range. If you mark out this dealing range, definitely don't worry, I'll come to that. I'll come to that. Now, you see now, this is a range, this is a range. Imagine you know about this fib level, you just boom, carry your long two, mark it out, boom. Correct sniper! They no born you well, guy. Knock am better lot. Correct sniper, that your $10 account just turn to 10K dollars ASAP. Correct sniper, that your $10 account 10K dollars ASAP. Boom, you can flex with your friend. You see how this fib level helps you to know the level that price will trace and continue buying. And what's the funny part? This fib level is always in line with POIs, right? People will see like, no POI here now. I'm not seeing a POI, but candlestick tap at this 83.3%. Now let's get down to something like 15 minutes time frame and check whether we see something API at that level. This is a 15 minutes. Let's scale down to 15 minutes time frame. 15 minutes time frame. 15 minutes time frame, 15 minutes time frame. Any POI, because you have to know, you have to see a POI there. Kaimali Haineme, you have to see a POI there. Yeah, you can see this FBG, you can see this is a mini what? A demand zone, right? This is a mini demand zone, but which one will you use? Will you use the FBG or mini demand zone? Let's check out something. Let's check out something. You know me, I love sniper entry, sniper or nothing. If I should be considering my sniper and use this FVG, let's extend it and know what price. Boom! Price tap at the FVG. You get price tap at the FVG, right? Boom! You put your entry at the midpoint of this FVG in line with what? The 83.3% fib what? Retracement. A good confirmation. Spike it, no even need to wait for change of character in 5 minutes. Imagine say you are waiting for change character in 5 minutes time frame. Na here price go do change of character. Is here, this is a change of character, then you look for entry here. Before you even enter here, Pablo sef don even dey back pips from here sef. They don dey back pips. The account will be turning 50%. Like the account don grow up to 50% before you sef don dey enter market. Why? Because they have the knowledge of what? How to use the fib level, right? How to use the fib level. Okay, imagine say you mark out this zone. Boom! If you mark out this zone, also though it's also a good entry, but I would prefer marking out this FVG because this FVG is a good POI. What? It's a good POI. Mark out this FVG. You can mark out this FVG. You see price tap into this FVG, rejecting above the 83.3% fib level. As price is rejecting, you know, this guy is rejecting this one that's going up. Then you knock it better lot. Enter, you are safe. Put your SL at this week. The price should come out this week, omo, run out. You get. So you see now, what did I tell you? The price is candlestick, 15 minutes candlestick is not expected to close below this the 53.3 sorry, the 83.3%. This red line you are seeing is the 83.3%, and so candlestick just weak it out. E no even close below there. Black, e no even close. Weak it out. This is the logic behind the fib level, how to use it. So we've seen this example, we've seen how to use it. This is the first example. We have three things to look at in this gold, and I got all these things. I got these three things, guy, with this fib level, and the thing sweet me. I was like, okay, I have to share this knowledge with other traders so that they will know about this fib level, know how powerful it is, how my fib level personally. I decipher these levels, these percent levels. I was the one that worked and decipher it. Remember, I'm a self-taught trader. No, I don't have a mentor. I work hard in order to learn more about the financial markets. Okay, now let's go. This is the first example. Now let's go to the second example. Now, when price mitigated this range, okay, let's check something. Quickly check something. Imagine say you are using this range as your dealing range. You are using this range as your low, right? As your low in your dealing range. Imagine, okay, you mark out your fib level from here. You mark it out from here and take it to the upside. Imagine, although price came to the discount pricing, but this is not even a good range. You get, this is not even a good range. Price has to come to somewhere. It's not even a good range. So you've seen it that this fib level will help to tell you your true dealing range. Your true dealing range is from here to here. When price action, let me say when price action is still currently here, your true dealing range should be from here to here. You get your true dealing range is not from here, it's not from this QMR that you be looking at. Definitely you miss entry looking at this QMR. You know, when price was dumping, people will be like, they don position themselves on this QMR, and baba will just come here, tap, leave them and go. Because what? They don't know their true dealing range. They were using this KMR as their low range, and here as their high. They don't know their true dealing range. So definitely they will miss the entry, and they will miss the gist of price. What price? They will miss a whole lot of money. Now we've seen about this range. We've worked this range. We've analyzed this range, right? Now what's the current range now? When price come here, tap, boom, from here to here, creating what? Another range. Sweet. You be catching trades. You no need to counter trade. Just be waiting for your range. This thing, mark out your range. Just know your range, your ranges, your range low and range high. This is your range low. You mark out your range low, then you mark out your range high. This is your range high. This is your range high. You mark out your range high, right? When price came here, mitigated this zone. This is This is a zone, a demand, sorry, a supply zone. You get hidden base. Most traders will call it hidden base or swing supply zone. So, ay God, Anambra tongue leave me abeg o. This a swing supply zone, you get. Now anything you call it, just know the logic. The nomenclature doesn't, e just confuse trader. Some trader will be like, what's this called there? This guy say is a supply zone, this guy say is a swing supply zone, this guy say is a PVP. Leave, forget nomenclature, grab the logic behind price action and forget the nomenclature, get. But this is what a supply zone that this guy tapped, right? That created that the reversal, that sponsored the reversal to the downside. Now, when price was reversing, you should position yourself to always buy at what? At the discount pricing. You won't love to buy at the premium pricing or neither. Sometimes price will respect the equilibrium pricing. But you won't expect your setup at the equilibrium pricing to take out a range high. You get. Although, unless when the order flow is very very bullish, sometimes it can happen, but it's always good to buy from discount. You get, and go up. So now let's use our fib and know where this guy will respect. You get, let's use our fib. Watch the magic. If you use this fib, you catch what is called correct sniper entry. Watch the, this is the range low. Mark out our fib watch retracement. Trace it to this side. This is the dealing high, right? The dealing range high, right? Trace it to this high. Boom, bam. What do you see? Exactly at the 83.3%. On top it, I call this guy, cut it, sniper, boom. Then let's check out the POI. Although you won't see the POI, this guy mitigated in 1 hour time frame. So let's get down to 15 minutes time frame and see the POI that is in line with this 83.3% level. Then let's get out to lower time frame, lower time frame. What's the POI? What's the POI? You mitigated this fucking bitch. What's the POI? Wow, 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 wow. Where this guy? See the guy here. And what's the POI you are seeing here? We are seeing here. See the POI you are seeing here. We are seeing FVG, fair value gap, right? We are seeing a fair value gap that this guy came to mitigate, right? You drag it, boom. Most traders will put entry at this fair value gap. Fine, you still caught the trend. But me, I entered here. Ha! Sniper no draw down aje. I entered here because what? I had the knowledge of the fib retracement e get. I had the knowledge, and I was the one that have that survived this code, so I should know what to do. I should know how to cast sniper entry. Now, when price was still at this range high, people were expecting to buy buy from here. You see, this thing. This is the premium. This is a QMR Quasimodo forming at the premium zone. How do you know that this Quasimodo form at the premium zone? How do you know the premium zone and the equilibrium zone of this range? Watch out. Let's use our what? Our fib, our normal fee for detecting what the premium pricing and the discount pricing. Yeah, let's use it. From here, this is a range low. You draw it to the range high. You get this. Forget this is a fib retracement, but let me just put settings. This is the normal fib level, the 80 fib level. Boom. Get, wow, you've seen it, right? You've seen that this is the equilibrium zone, right? Although here you can see that this QMR rightly formed. This is a 50% level. You can see 50% level of the range. 50% level. You can see that this QMR from inside the equilibrium zone, right? Now you see setup. This is exactly a setup at the equilibrium zone. Now price no respect this setup, because why? This setup at the equilibrium zone is not strong enough to take out the range high, because this range I mitigated a higher time frame supply zone, and you see that price is dumping with momentum. So in order to be at the safer side, you should be focusing setup at the discount pricing, not setup at the equilibrium pricing, nor setup at the premium pricing. You see now, people I saw when this guy reach here, definitely people mark out their entry. I was like, I posted this on my WhatsApp status. I tell the people that QMR we are seeing is at the equilibrium zone, and watching the current momentum of the market is mitigated a higher time frame supply zone and it's dumping. So don't expect setup at the equilibrium zone to hold long, even though it will hold. Be looking at setup at what? At the discount pricing. And when price came here, I waited for this guy to even take out this KMR. When price came, boom, you see now price engineer liquidity. This is a liquidity, engineer liquidity. When I saw this engineer liquidity, I was like, I even doubted that okay, this guy might respect this zone. And this guy engineer liquidity. You know, when price is approaching your POI, you expect it to engineer liquidity near your POI before tapping it, before mitigating it. So price engineer liquidity. but what didn't mitigate this guy and spike up. It didn't mitigate this guy. So price then disrespected it, and I was like, wow, let me focus for the feast, for the real move of the market. I position myself here, boom, at this 83.3% XRP, boom, and knack a better lot. And and price took me all the way to a new all-time high. Chop the move, no wasting of time. Let me take back this guy to fib what retracement and lock it. Then let's go back to 1 hour time frame. I chop the move, I chop the move, I chop the move, I chop the move. With my inner circle, they all enjoyed it together, right? They all enjoyed it together. Okay, now let's also bring the sweetness of this trade. What do I mean by the sweetness? Carrying your long two, placing it here. Imagine exactly at that 83.3%. Placing your long two your long two here, and your SL should be at the midpoint within these two range, right? Your SL should be at the midpoint. Bam, then spike it up to the new all-time high. Chop. Although I didn't hold this trade to the new all-time high. I closed my trade around here when price mitigated this zone. I just closed my trade, and because I was satisfied with the profit I was seeing, so I don't need to be greedy. Because most time you tend to be greedy and price will take back your profit. You be like, what the fuck. So now what did I tell you guys? That when price come down to that 83.3%, you don't expect candlestick to close below that zone. You see, let's watch. The 15 minutes candlestick close. This is 15 minutes time frame. The 15 minutes candlestick close below this red line, this 83.3%. No, you just tap it, leaving a wick and spike up. If 15 minutes candlestick should close below here or more, know that this low is what is at risk. And what did I tell you? That your POIs are always in line with the 83.3% zone within this range. Your POIs are always in line. Why from that 83 down is your weak. Your weak. I know when price close here, it's definitely going for your weak, and boom, you might chop SL. So now this is what the second example in gold, the second swing trade example in gold. Now let's go to the current and the last swing trade example in gold. You get now, or let's go to the 1 hour time frame. 1 hour time frame, 1 hour time frame, 1 hour time frame. Boom. Exactly the trade I'm currently on right now. You get. See now, gold has been misbehaving throughout this week. The price action is yaga yaga on my chop SC at this range, because I was like finding my way all through here. But I definitely know that price will dump. And I was expecting, I was even arranged, not even expecting, I was even arranged for this guy to dump exactly or at my discount zone, that 83.3%. And already mark out my range high and the range low. That is the funniest part. So I was just waiting for this guy. And see, I marked out my range low. This is my range low. This is the current dealing range, right? Current dealing range. I mark out my range low, lock it, mark out my range high. This is my range high. Get my range high. I marked out my range high. Get I marked out my range high. I think where was that chart? Where was that time? You don't think why mark it out. Where is it? Gold long. You can see where I write it, gold long. Let me draw it to see it. I see how I use the fib level. See, every man when price was still consolidating with there, I will reposition my this thing, my long two here, expecting this guy to tap it and spike up. You get, let me off it, gold long, gold long. You see. Now let's see the magic. Let's know this fib extension. Louise, with this fib extension, respect your 83.3%. How do you know? Let's watch the magic. You see it with your eye. Now let's take the fib tool. Remember, this is a bullish order flow. Mark it out from the range low up to your range high. Lock it. Oh, Jesus save me. Now, what do you see? Sniper gang, sniper entry, no drawdown, kpokirikpo, adamaka, you can't find it anywhere. See am, boom, boom. What is the POI in line here? Boom. What will I tell you? I used to call this guy inverted AVG. No more any name, sha. But you also know that most times this AVG zone price just boom mitigated it the first time, but price in future time will still come and mitigate this zone. Most people would be like, this AVG is invalid, but it's always valid. This I've seen this thing occur many times, and it's always valid. And the gist here is what, that the 83.3% is in line with the zone, and that zone is the current, like, is the best place to take a long entry, considering the what, the range, the current order flow, and the range you are dealing with, right? Let me take out this guy. Now let's get out to 15 minutes time frame and clearly see the POI in 15 minutes time frame. You get this is a 15 minutes time frame. Take out this guy, take out this guy. What's the POI I see here? What's the POI I see here? You can call this mini demand zone. You can call this guy mini demand zone, having an inducement, although the inducement mitigated it, right? Mitigated. You can call this guy mini demand zone, or some people even extend their two here and call this guy breaker. Anyone, just know the logic, right? The logic. Trade is about logic and about gathering confluences that backs up your decision, your entry. Back You have to have confluences that backs out and say, this guy gonna play out. If you have only one confluence, someone just know you're wasting your time. You have to have two or more confluence, possibly three. It's okay. That will make you, yeah, give you. You see now. You see now. What are the confluences we have here? Price created a range low and a range high. Price was dealing a range, and price, that's a good confluence. And now we have to buy from what the discount pricing, and we use our fib retracement, and it's the second confluence. And what's the third confluence? This mini demand zone, right? Three confluences backing up our decision, right? And price came here, boom, tap it, e see kpokiri, but they no fit find am. Price no close below this 83.3%. Let me delete this guy first. Price no closes below this 83.3%. See, price just weak it, close above. Remember what I told you. If price should close below this red line, this 83.3%, definitely is going for your range low. This is the third example swing trade in gold, and I'm expecting this trade to take out the all-time high and create a new all-time high on gold, right? Imagine say you knew about this fib about this 80 alien trader fib level, right? Imagine say you knew about it, you would have chopped three swing trade on gold. You'd be rich, massively rich by now. You have chop this one, still come chop this one, and there's still another one coming in future time. So you just have to position yourself as you've grabbed the knowledge. Imagine I'm sharing this is a costly knowledge, but I'm just sharing it free for my followers, for my ex followers. Always follow me up, I'll share more free knowledge, things that I've discovered personally in the financial market. Nobody taught me this, nobody. Onye kuzi me this thing. I studied the financial market as a newbie and discovered this thing. I've been using this fib level to trade gold as a newbie. As a newbie, this was actually my first strategy. I've been using it to trade blindly when I don't even know about POIs, and this thing helps me a lot. But now I've grabbed many knowledge about the financial market. So when trading it, I add other confluences, POI, considering the current order flow, even many things, guys, many things, so that to back up my decision, my entry decision. Now you've seen how this fib level we help has helped has helped us detecting three swing trades on gold. Three swing trades on gold. Remember, share this video to your friends and family, to your struggling traders. It will help them a lot. Always study hard. You can make it as a self-taught trader. You don't even need to pay for mentorship, but advise you, if you are lazy to learn on your own, pay for mentorship to for your mentor to carry you along. But when I started, I wasn't lazy. I was like, what's going to work in this financial market? I learned many strategy and I refined them and brought it down, and I discovered my edge in the financial market. Now I told you that um this 80 fib level works mostly on my two best pair, gold and BTC. We have talked about gold. I don't want to make this video long, but we just take some views on BTC, right? We have talked about gold. Let's go to BTC. Although you can use it for other pairs, but I focus mostly on these two pairs, right? You can use it for other pairs, and when using it, make sure you mark out your actual dealing range before you use this fib level, the extension and what the retracement fib level. Now let's go to BTC. What's this guy? BTC has been dumping so far. I don't even know what's dumping this guy, but all everywhere good, everywhere good. Now let's check the bigger view of BTC, the higher time frame view. I don't want to go to the lower time frame. Let's check the higher time frame view of BTC. BTC have been moving jaga jaga. So when this using your fib level here will be a bit tricky, because a whole lot of range and all these things are range in lower time frame, alright? But let's deal out with this obvious range. This is an obvious range, right? This obvious range, mark out your range high. This is 4 hour time frame, remember, and gold we marked out our range high from 1 hour time frame. You get. But this 4 hour time frame, if you mark out your range, I think 1 hour time frame should be a good place for entry, unless if you can still scale down to 15 minutes time frame. But anywhere is good. Now let's know the discount price. Although gold is coming, we expect, sorry, this BTC, right? I don't even know whether this guy is dumping or pumping when he was even actually here. Although this guy, but he was dumping, so no need of even looking for um long. Only short you should be looking for. So let's look for short entry. This is our fib. We mark it out here. Boom. Mark it out here. This is a range low, right? This guy no give a deep pullback, a deep retracement. But if you can see, all the good retracements were happening in this premium pricing, right? Premium pricing, although you not tap at this 83.3%, because why? BTC is heavily bearish, is heavily dumping. When price is heavily dumping, it will just come at this level, at this ground zone, and dump. But if it's not heavily dumping, you can just mitigate this 83.3%, and boom. You see now, imagine say you know about this field level, you mark out your range, you know your premium zone. Anytime price come here, omo, just knack am better lot, it will come down. You see the first time that e came here, you knack am better lot, e come down. Baba came here again, knack am, e come down. Baba came here, e knack am again, e come down. You get, see where price is just currently drilling at the this is where price is currently at. So anytime price come here, because BTC is bearish, so it's looking mostly for short position. You get, so when price came here, boom, knack out better lot, anyone. So I don't wanna make this video long. You've seen how I use this fib level, how I use the retracement. So I not talk about the extension. Um Not talk about the extension. Okay. This thing works mostly on gold well, but it works on BTC, but I enjoy good price action. And it's good that helped me discover about this 80 alien trader fib level. It was good. It's actually on good chart. So let's go to, you can use this thing on BTC too. But BTC is tricky. So when using it, always be smart. You get, don't just use it blindly. So now, oh, okay. Let's talk about fib extension, right? Let's know the extent that price will tap and reverse. You get, let's use this range as dealing range. Let's use this range as dealing range. This range, sorry, let's mark out this range high as the range. And this is what this range high, this is a range low of this range high, right? So now let's use our fib extension to, let me change it to fib extension. This is fib extension. Boom. Extension. What do I tell you about fib extension? When you're marking out your fib extension, where is the origin? This is the origin of this range, right? This is the origin that is taking out this side, right? So when you're marking it out, you mark out from here, boom, scale down to the origin. Scale down to the origin. And like I told you, this is a 50%. You get, this range from here to here is the, how, is the replica of the range from here to here. From this 100% to here. Let me off this guy so you'll be seeing what I'm talking about. From here, from this range, from this 0% to this 100% is the replica or the same range from here to here. Get now. So, but when price retrace up, people should be focusing mostly at the 50% here for this guy to give it. But I don't understand this price action. But understand the gist. Look at something now. Look at something now. You've seen price created a range low, created a range high, and this is what fib extension. It tells you the extent of when price will reach and dump. You see price no pass price action, you want to know the extent. See, you know that price has swept liquidity, boom, clear here. When price take out this high, you know normally this is a liquidity sweep, and when price sweep a liquidity, you expect price that week, that candlestick or that pattern that swept liquidity will engineer liquidity for a POI above. What did I mean? Let's say we have a POI here, we have something like this, we have a POI here, error block here, and we have something, this structure, we have this structure, this is the other block structure, having a structural liquidity, boom, having a structural liquidity, and you expect future time for price to respect this other block. What do you mean? What are you expecting to see? When price come here in future time, it will clear this structural liquidity. First of all, clear it because it's liquidity. Once price clear this structural liquidity, you expect price to give a retracement. Price clear this structural liquidity, giving a retracement, thereby engineering liquidity for this POI that is about to mitigate. Do you understand the gist? Price price clear this structural liquidity, giving a retracement, thereby engineering liquidity for this POI, for this other block you have above. Price retrace, then come up, mitigate this other block, respect, boom, create another structural liquidity, and then drop back. You see that's definitely what price did here, but you have an invisible POI there, POI that you can't see, because we are dealing with past price action, we are doing future price action. There is no price action in order for you to know this thing. Okay, let me show you the this thing, the invisible POI. Let's assume the invisible POI is somewhere around here, is somewhere around here, here. The invisible POI is somewhere around here. You get? And this is a structural liquidity. These two are the structural liquidity for the invisible POI here. I see price came, first of all came, clear this structural liquidity, thereby engineering liquidity for this invisible POI. Price tapped it, boom, pulling down, you get? And watch the gist. This invisible POI is currently in line with this 166% of my fib extension level. It's currently in line with this fib extension level. So I won't talk much about this fib extension level, but you've grabbed the knowledge, you've grabbed the logic behind it. So just use it, and for other pairs like BTC. I told you that this thing works mostly on gold and BTC. Although you can use it for other pairs, you get. But I don't trade other pairs mostly. I just focus on my two wife. This is my two wife. Gold is my main wife, while BTC is my side chicks. You get? So then I have what I called my psycho level, psychological level, right? And this psycho level works more also on BTC and gold. And this psycho level helps me to detect future price action. If you check my Twitter line, you see that there is some trades I caught a sell when price created. What was there? Well, I caught it without future price action. Sorry, without price action. I think I caught this sell here. You see, when price was still pumping, I exactly from here I caught a sell here. How? No past price action. How did I know that price will sell off from here? I use what is called my cycle level. This cycle level, I drew this cycle level last year. I started learning trading last year February. This 2024 February. That's when I started learning trading. It took me not 6 months advance. I grabbed most of the knowledge and start working out on finding my edge. You get? So when learning trading, you don't even expect to take you that much long. But if you just grab the knowledge, work out finding your edge, then take your journey to your work to your profitability journey, anyone you call it. So now that's when I started learning trading on my own, that I discovered cycle level myself, and I marked out the cycle level. Let me show you the cycle level. I have my daily or 4 hour cycle level and my weekly cycle level, and my 15 minute cycle level. Now this 4 hour time frame, this 4 hour time frame, you see, this is my 4 hour cycle level. Wow. Don't worry, this cycle level is another topic altogether. But I just want to tell you that this cycle level help me to detect future resistance and support zone where gold will mitigate and dump. I can tell you future support zone where gold will mitigate and dump without past price action, with the help of this cycle level. Now if you look at this cycle level, pay more at ten tion to the major swings, see here, tap here. And do you know the funny part? You know, when I drew this thing last year February, when I started learning trading. Last year February should be around this January, last year February should be here. I think this where I started drawing this guy. This way I started drawing this guy. See where he stop. This way I started drawing this guy. I drew it to this level. I drew it reach what you don't see where I reach. When price action was still currently here, I was trading with it. I caught this thing last year. The price action was here with the help of my cycle level. I caught this sell. Boom. And see, look at this future price action respecting my cycle level. Price respect either my cycle level or midpoint between two cycle levels, right? So now you see this guy respecting the midpoint between these two level, and this guy resistance zone. How do you even know that this cycle level resist price? This cycle level works like magic on both. I have BTC cycle level and gold cycle level. This is the 4 hour cycle level. Also, I have the 15 minute cycle level. This cycle level, I don't want to talk about it, but I'm already exposing secret about it. But that one should be another topic of other day. I think I do explain about this cycle level to my mentees. I do explain about it where and how to use it, right? So let me show you how the cycle level works, how the 15 minutes works in line with the 4 hour cycle level, right? Let me show you something. Let me show you something. Let me show you something. Let me show measure this thing now. If I wanna catch gold from all time high, see I will catch gold from all time high without past price action. Let's say this was the current all time high. You can see no past price action at this all time high. No past price action in order to tell you where gold currently sell, right? So now let me use my 15-minute cycle level. My 15-minute cycle level is also the same thing as this my fib level, because my fib level was actually derived. Those values was actually derived from my cycle level, right? They were actually derived from my cycle level. This, let me see the 80 cycle level. This is the major cycle level, and that's my 15-minute cycle level also. You get this 15 minutes time frame, right? Drag it here, drag it. See, do you see what I did? I connected. This is the major cycle level. This is 4 hour cycle level. And this 4 hour premium cycle level. And this 4 hour discount cycle level. So we are considering this cycle level. And gold was inside this cycle level now. Then I have to use my 15-minute cycle level in order to refine my sniper entry. Because this cycle level helps me get sniper entry. If you watch most of my trades, sniper entry. And it's the help of this cycle level. Now let me show you something. I connected the high of this 4 hour cycle level, connected the high, and then drag it to the down, drag it. See, if you are attentive, you see that price reacted. You also react at this cycle level. See this guy react close to this cycle level. See this guy, see this dump from all time high, exactly on this cycle level. Boom. See this guy, boom, tap. See this, most of my price action. See this guy now on this cycle level. See, and also if you're using this cycle level, use it in line with use it in line with POIs. Imagine, and my A plus setup is when a POI is in line with my cycle level. Woo! I dey knack am better lot. I no dey waste time. My A plus setup is when a POI is in line with cycle level. Let's check something. Let's check. This one is no need to talk. Let me show this 4 hour time frame, right? This is cycle level, right? This 4 hour cycle level, right? You see now, what's this current? See, remember when I told you I reached cycle level last year? Look at this current buy on gold. Where did it tap? This 4 hour cycle level. Let's get down to 15 minutes time frame. And this 4 hour cycle level was in line with that 83.3% fib level we talk about. See am, exactly on this 4 hour cycle level. Imagine, last year I've already know the future resistance and support where price will react. Exactly on here, you see, tap am, boom, spike up. And here is always in line with a POI. Remember, when using on cycle level, it has to be in let me not talk about the cycle level. That one is another topic of about the day. But if I teach you about the cycle level to blow your mind, like you'll be like, wow, how this guy got all this knowledge from? All this knowledge we are gotten by hard work. So when you know about the financial market, work hard to see what others can't see. I I'm not bragging, but I would what I say I do see, sometimes I do see what others can't see. I do see future support and resistance zone. Most traders don't see that, and they can't decipher that code. So this has I've come to the end of this section of this video. Thank you guys for paying more attention to this video, and although it's long, but I think it worth it, right? It worth it. So if you want if you want content like this, do well to follow me, like my video, you follow my Twitter handle or my YouTube channel. I will post the link, everything. Although I haven't created YouTube channel more. I just started trading. I told you last year January I started trading, so I just focus on working, like on refining my strategy before I'll start doing all those stuff. But sha, I have a Telegram channel already. Then follow my Twitter handle. I'll be dropping videos on my Twitter yet. So don't miss. I'll be dropping video, and I'll be helping newbies that don't have the money to pay for mentorship. If you follow my page and watching my videos, you will learn a lot from me. I'll tell you how I was able to cope up within 6 months learning trading on my own. You learn a lot from me. So thank you guys. Like, share, follow, share to all your friends. Tag all your idolo, all those idolo. Although if I chat them, they won't respond. Why? Because they will feel like, yeah, this guy is a newbie. If they look at my account on Twitter, they'll be like, 300 followers. He's still a newbie, no need of. But they don't know that there's some newbies that have 5 years experience that most people don't have, right? So that's it. But so do well to like, follow, and tag your idols to this video. I think they will enjoy this video. They will learn a lot from it. Thank you guys for staying to this level. Thanks. I love you.